Stock of the day is Coles. This after it posted third quarter sales up 3.4% to exceed $10 billion, underpinned by more than 5% growth in its supermarkets. Liquor sales fell as shoppers elected to cut back their spending on beer and wine. Go figure. Revenue from Coles continuing operations was up 6.4% in the March quarter, a figure that strips out the express convenience stores that were sold last year to Viva Energy Group. And taking a look at their performance today in terms of the shares, pretty flat, up marginally there. And in fact, Michael, you're referencing those retail sales numbers that just dropped. In fact, before the show, they actually fell 0.4% in March. Clearly, as those high interest rates, household budgets remaining under pressure, that was against a consensus for a gain of 0.2%.
Yeah.
I guess you're more likely to see that with discretionary stocks, but when you take a look at the staples, and in particular Coles, how are you seeing it?
Well, I mean, in terms of those numbers, it will affect them in some respects with their liquor department, of course. That is still, to some extent, a bit discretionary, and they did note in their update today that they do expect that growth in that area to be a bit more subdued. But beyond those figures, I think, okay, at the end of the day, is Coles a good investment here? Well, if we have a look at what it's done over the past 4 years, share price wise, it hasn't really done anything. It did hold up pretty well in around 2022, of course, when there was a lot of concern about a recession. The share market did quite poorly. Defensive stocks like Coles held up pretty well, but now it's lagging the broader market. So now that the market's really moving, as we could see on this chart, Coles has actually been underperforming the market over the past 12 months. So you've got a business where they're growing the revenue 6.4% year on year, so earnings is only a couple of percent a year. You get about 4% on the divvy plus franking. You could pretty much get that putting it in your offset mortgage. So look, I think that as an investment, it's not that enticing here. I think if you've got a share market that will improve, there'll be other opportunities. So it's not one for me. I'd rather put the money to work elsewhere where you can get a better return.
Does that apply to the other retailers, Woolies, and some of the other?
Definitely all those defensives. I just think now's the time to be rotating out of those. So I still like retail. I mean, we've recently picked up JB Hi-Fi, but clearly JB Hi-Fi has a better growth profile than Coles, and I think that can do well over the next couple of years. So for staples, I think they'll underperform the broader market.
So you actually then put a sell on it, would you, or a hold?
Yeah, I'd sell it and move into something else. I mean, for example, one of our clients recently, we sold Coles just to pick up some Macquarie shares down here because Macquarie's pulled back a nice amount, and I think if I look out the next 12 months, I could do better in Macquarie Bank than in Coles.
All right, Francesco. And of course, we should note too that the supermarkets have been under intense scrutiny of late, given that inquiry, allegations of price gouging. That hasn't really been proved, of course, but nonetheless, there's certainly that political pressure to bear.
Oh, look, the bigger supermarkets in particular go through this every couple of years. They have some parliamentary inquiry or something, overlook their pricing process. But when it comes down to it, there's fairly thin margins in groceries. There's not a lot in it. They do quite well when there's inflation, and I think we've seen that in their $10 billion quarter, which is the first time they're over 10 bill. It was dragged back, like Michael said, by the liquor side of things. I think what you'll find is, I don't think the volumes changed a great deal in liquor. I think it's just a change in downgrade in quality, if you like. Instead of buying, the top shelf or boutique beers, they're buying the basic beers. If they're buying spirits and so forth, they're from what I understand reading Coles is that they've downgraded to pre-mixes, so they're probably buying less of that. And even things like champagne, they're going down to Prosecco. So I think we will find on the discretionary spending side of things, people are still spending and still finding ways to enjoy themselves in that respect, but doing it on a budget at a lower quality. And I think you'll find, and they mentioned that in the supermarket side of things, where there's a lot more emphasis on the store brand rather than the the quality brand, if you like, without being horrible to the store brand, because they're probably made by the same people anyway. So you know, instead of buying the prosciutto, you're buying the ham, that sort of thing. Instead of buying, you know, camembert cheese, you're buying the cheddar cheese, sort of thing. So I think what we find, and you'll find that I think in a lot of the discretionary spending side of things as well, that people are still spending, but they're downgrading their quality. Michael mentioned JB Hi-Fi, you know, such a great quality business in the retail space. I think you'll find that you know, some of that spending that was brought forward because of COVID, they're still seeing spending come through, but they're saying that it is on a lower scale, if you like, or downgrading scale. So on Coles, we'd be a hold on that. Wouldn't be, you know, throwing it out just for the sake of it. You know, it's a good portfolio stock. We prefer Woolies in that space. Not that I'll be buying Woolies too strongly at the moment anyway.
Yep.
Like Michael said, I think, you know, this sector, you know, the stocks like Coles and Woolies are trading at fairly high multiples. So, you know, it's not the best, you know, if you're looking for growth, it's not the best time to be buying those stocks. I think that'll come maybe, you know, as we see potentially rates come off maybe next year.
All right, so there we go. We've got a sell and a hold for our stock of the day, Coles.